Trump is back in office. What does that mean for real estate investors? Is the market going to take off like a rocket? Let's break down what happened 45 versus 47. In this video, I'm going to talk about the actual tools that President Trump has to impact the commercial real estate market. Now, Trump has a lot of different levers at his disposal, but not all of these have the same impact on commercial real estate investing and what that means for you in 2025. Specifically, we're going to talk about industrial commercial real estate. That's the area that I know, and we're going to talk about the impacts in commercial real estate specifically. I'm going to walk you through what power Trump really has and what steps you should be taking to make the most money to take advantage. First of all, we all know that Trump loves real estate, okay? From Trump Tower, Mar-a-Lago, his various licensing casinos, he loves real estate and real estate loves Trump. So the number one tool in his toolbox is going to be interest rates. It's not something that he has a clear line of power to, but it has the biggest impact on commercial real estate valuations. All right, so we're going to come back to that one. Regulatory. This is also a big area that has very slow moving impacts. And we did see a big improvement from his first presidency. He can drastically reduce enforcement, cut the size and the scope of what the federal regulations about drilling, tidelands, federal permits, licensing, all that stuff. That will drastically improve different types of development and other key motivators in the economy. Now, let's talk about industrial. Specifically, he's talking about reshoring, which is bringing manufacturing back into the United States, and that could have a huge demand for industrial product. Industrial has had a low kind of last 2 years due to interest rates, but this could be poised to bring back the industrial real estate market. Not only reshoring, but there's also nearshoring. So if he's bringing manufacturing back to Mexico, he's getting it out of China with the tariffs, we could see a lot more warehousing and distribution along that north-south corridor up from Mexico. So this could benefit California, Arizona, and Texas significantly. Finally, there are risks to what he's saying. If these tariffs cause massive inflation and the economy does trigger into a deeper recession, that could devalue all of commercial real estate broadly just based on decreased demand. Now, if you have these triple net leases and the tenants are still performing, your values might still be protected, but the overall economy would be in a decline, and so that tends to push down the number of bidders for commercial real estate assets. So let's go back to Trump's number one tool. This is something that he is the most vocal on, which is appointing somebody to the Fed that has his best interests in mind, which is potentially lowering interest rates. So he's been an outspoken critic, and this is something that I think is way more impactful than any type of congressional legislation. So we've got OZ, we've got 1031, we've got top tax rates, we've got the tax cut, marginal income tax rates. These things don't really move the needle as much as interest rates. That's the direct correlation. And if he does choose to take those steps, we could see a huge boom in commercial real estate, and it might trigger more inflation. Who knows? But right now, the 10-year Fed, let's see what the 10-year Fed is at. Because the 10-year is what everything in commercial real estate moves off of, and it's going up. Guys, we haven't seen this type of movement that despite all of the recent rate cuts, the 10-year, which is what all commercial loans are based off, keeps moving up. So it was 4.38 and now it's all the way up to 4.79. That is just making it very tough for commercial real estate and everybody to price appropriately. So unless this 10-year comes down, we won't see any relief on the debt side or the cost of debt for private real estate investors. So the best thing that you can do, given all of this range, is to buy real estate at current debt pricing. And what I mean is you need to be getting a 10 cap. You need to be getting 11 caps, because if your debt is coming in at 9, there's nowhere for you to go except for profit if you get a little bit of cap rate compression. And at 11 cap, the yield is going to be pretty strong, all things considered. And if you're positioned to benefit from some of the things that we think he's going to do unilaterally, like tariffs, he's not relying on congressional action. That is going to be my advice. So buy, keep pushing money out, and if interest rates do drop, then you're going to be able to sell for a big profit. But you got to be cash flow positive. You got to be hitting your cash on cash returns. I think that Trump is going to be a big benefit for commercial real estate investors. He's going to create new opportunities through reshoring and nearshoring for manufacturing. I think the tariffs is all really just kind of a talk. I think it's going to be used as leverage. He's willing to do it if they don't get concessions on other areas, but I don't think that the tariffs are actionably implemented in a way that is detrimental to the economy. So the best strategy, stay ahead, be informed. What do you think? Drop a comment down below if you think Trump's going to be good or net negative for commercial real estate investors.